Friday at 12:30 p.m. only on Bloomberg Quint.
Hello and welcome. This is the F&O Show on Bloomberg Quint Live, India's first digital live streaming business to service. I am Agam Akil, and here are the headlines. It's a positive start to the trading day. Markets are set to end the truncated week with gains. The Nifty trades above 11,550. The Nifty Bank has scaled the record high of 30,000 in intraday trade. All its constituents trade with gains. Kaveri Seed Company and ICICI Prudential are seen to surge in open interest. Kaveri Seed sees fresh longs while shorts are seen in ICICI Prudential. And SpiceJet continues to gain after Bloomberg reports that it may take control of some of Jet Airways' planes. Now, with that, let's take a look at the markets. And as I was suggesting, we have seen further advances for the indices. Well, we're likely to see a positive end through this trading week with, a little over 0.5% gains, if not more. Actually, it's just come off, but we're still up as much as well over 0.25% for the Nifty at around 11,560 odd levels. So, well, comfortably above the 11,500 mark. And what we're, however, also seeing is a little bit of unwinding. And this has been a continuation of a trend as to what we saw last Wednesday too. So unwinding continues. Whether or not this is towards short covering, or is it because of the rollover that is taking place, considering we are also looking at expiry this upcoming week? Well, that's a matter of that's a question that we are going to get an answer, perhaps if not today, then perhaps on Monday. But let's keep an eye on this one. Moving on to the Nifty banking futures too. The picture shouldn't be any different. So if we can also have that one, unwinding continues there as well. So we certainly will start seeing a lot of traction building in as far as the April futures go moving on. But also to take a look at the India Volatility Index and whether or not there has been a lot of change. We're actually seeing a little bit of an up move in the India VIX as well. Not substantial, but a move all the same. Currently at around 16.2. And that's it. In terms of options and option premiums, how is that stacking up? So let's also pull up the most active options in today's day of trade and take a look at where there is more writing. So this is, of course, your option, open interest distribution, and where we are seeing a little more, your max OI continues to be with the 11,500 at this point in time. When that's the 11,500 put. 11,600 call is the one which has max OI. Are we likely to see expiry between these levels? That's a question we pose with our experts as well. But moving on to your several other variables, we're keeping an eye on open interest change, and as one might expect, a little more writing around the 11,500 mark, consisting of, 11,500 put, considering we are seeing, the Nifty hold on about 11,550. So a lot of crucial levels to keep an eye on there. But moving on to some of those stocks which are seeing a surge in open interest, let's keep an eye on several of these counters. I've already mentioned ICICI Prudential as well as several other counters like Kaveri Seed Company, which is seeing some amount of traction, and we're going to keep an eye on this. Escorts, of course, is the other one, which is also getting a lot of viewer queries, so we'll be addressing that one as well. Reliance Capital and BML, among other stocks which are in focus and are seeing a surge in open interest of as much as 6 to 7%. Moving on to those stocks which are seeing unwinding, and I reckon that this is where the numbers will be much sharper, and this is because of rollovers which have already begun. ONGC is seeing a decline of 23%, even as its underlying declines by 2%. Yes Bank, on the other hand, in line and in tandem with a whole host of other banking stocks, is also seeing a drop of around 22% in open interest. NMDC, HDFC and Vodafone Idea, among others. Do remember we have the TRAI data, which has had a lot of your telecom companies react to that none. But, that said, let's move on and talk about all the stocks that we will be looking to address in today's day of trade. I've already spoken about ICICI Prudential and Kaveri Seed Company. Escorts as well is something that we are taking into consideration today. And Bharti Airtel and Z Entertainment specifically has seen some very interesting moves with respect to open interest. So we'll be talking about that as well. And on that note, let's get in our experts. But before that, here's a reminder, if you have any queries regarding the futures and options space, you can call us on 022-454-04141 or write to us on Twitter, Facebook or YouTube with the AskBQ hashtag. And on that note, let's welcome in our experts for the day. We have Nilesh Jain of Anand, Rathi and Kunal Shah of Indiabulls Ventures joining us. Good morning to both of you and thanks for joining. Kunal, let me start off with you. Let's just start off with your view on the indices. Positive, continuing to see an upside?
See, I think overall the momentum still remains on the index on the buy side. I think yes, the index has seen some kind of rally in the recent times and the momentum is likely to be continued. So for an intraday purpose, I think Nifty definitely one should initiate buy at the current levels for targets of 11,640 to 660 on the upside with a stop loss of 11,530 on the downside. Overall, yes, we have seen some sharp rallies that has come into both the index Nifty and Bank Nifty, and we might see some kind of consolidation or profit booking that would be coming even going forward. But at the current juncture, since the momentum still looks very attractive, I mean stocks like Reliance, L&T looks very sharp, I think that would definitely give a more aggressive push to the index on the upside. So at the current juncture, yes, definitely remains on a buy side, but yes, we are now closing to some kind of a profit booking that would be happening in the next week since we are even heading towards expiry. So be cautious on the market. It would be a sideways market, but the undertone for the market still remains very positive. But at the current levels, it still remains a buy with a target of 11,640 to 11,660 on the upside. For Bank Nifty, 29,900 is a very crucial support on the futures front. As long as 29,900 is maintained on an intraday basis, definitely one should be on the long side and see targets of 30,150 to 30,200 on the upside. So on both the index, my view still remains on the buy side. For Bank Nifty, 30,150 to 30,200 with a support of 29,900 on the downside.
All right, so Kunal remains fairly constructive, even though he expects some amount of volatility as we move into expiry next week. But Nilesh, what about you? I suspect you are also constructive on the indices.
Yes, right. Very good morning. See, first of all, we have seen, if you look at the derivative data, I want to start with that. We have seen throughout the Mars series, beginning of the Mars series, we have seen a huge amount of call OI base was placed around 11,500 call strike. Now in today's trading session, we have seen some sort of a short covering 11,500 strike. So that is certainly big positive for the overall Nifty chart. On the higher side, if you look at the maximum OI is now shifted to 11,600. That is the immediate resistance. It is a matter of time we'll break out above that as well. If you look at the Nifty overall chart, we have rallied almost 7 to 8 trading sessions. We may consolidate for a couple of sessions, but overall the undertone remain bullish on the long side. Along with that, I just want to share one more big point for the investors. We have witnessed a golden crossover. That is where short-term moving averages crosses the long-term moving averages. So here we have seen 50-day moving average is crossing 200-day moving average. After a long time, we have seen the last time we have seen the rally of almost 900 to 1500 point rally when the golden crossover has occurred. So now I'm expecting a rally to continue towards maybe 11,700. So my immediate target that I'm expecting from a very short-term perspective, 11,650. Whereas immediate support is now placed around 11,500. So that should be the stop loss for the upside target of 11,650.
All right, guys, so that's the view on the indices, and of course both our experts currently are fairly positive on the indices going forward, especially based on the kind of momentum that we have seen off late over the previous couple of weeks. But what about the stocks, and what stocks are looking good towards buying or selling? Kunal, coming back to you, your view.
See, I think at the current levels, SRF has already seen some kind of long build-up that has been happening into the stock since the past couple of trading sessions. The stock finally today has given a breakout and has seen fresh buying coming into the even cash market. So I think yes, definitely SRF at the current levels looks very attractive. One can definitely look to go long the stock at the current levels with the targets of 2,500 to 2,530 on the upside with a stop loss of 2,380 on the downside. So I think the overall momentum still remains on the buy side. Even if you see the past 5 to 6 days data, aggressive longs had already been built up into the stock, and now the move is being carried forward. So I think yes, SRF is a good bet at the current levels, and one can see some quick upside towards the levels of 2500 to 2530 kind of a zone. My second pick would be Titan. Again, Titan remains in a very strong buy momentum. The stock has seen recent rallies with significant amount of open interest. I think the open interest is still carry forward, maybe carry forward toward the next series, and we are seeing fresh longs that has been building up into the stock. And along with that, on a delivery basis, even we are seeing some fresh volumes that has been generated on the cash market. So I think both the data still indicate a positive momentum on the upside. One can definitely look to buy Titan at the current levels with a stop loss of 11.05 for targets of 11.40 to 11.50 on the upside.
All right. Well, those are some of Kunal's recommendations. And well, moving on to Nilesh, I believe that he has, a slightly more complex strategy. He has a bull call spread on HDFC, if I'm not mistaken. So I'm going to explain the bull call spread, and then I'll ask Nilesh to take over. A bull call spread is employed when one expects a moderate up move in a security. And in this strategy, a call option of a certain strike is purchased, and a call option of a higher strike is simultaneously sold. So, well, with that, Nilesh, let's talk about HDFC and why you are employing the strategy and how you would employ it.
Yes, you have rightly mentioned about the bull call spread. See, technically, we have seen a fresh breakout in yesterday's trading session. If you look at today's data, we have seen quite a bit of long build-up is happening in this particular counter. And throughout the in this whole March series, we have seen slight run-up, but it hasn't participated in the rally of the overall Nifty and the market. So I think from here, HDFC and HDFC Bank and L&T, these are the large cap counters which is likely to lead the overall rally from here. So HDFC, I would suggest to buy one lot of 2000 call and sell one lot of 2050 call. So I'm expecting HDFC to move moderately towards 2050 kind of a zone. So the current spread is coming around 16 to 17 point, whereas the maximum reward could be of 33 to 34 points. So that is the maximum reward. One can initiate a bull call spread. My second recommendation is on options, that is a L&T 1420 call option. We have witnessed a fresh breakout from 1410 levels, and we have seen quite a bit of a good amount of rally in throughout the March series. I believe this counter is moving towards 1500 zone, but for the March series, I think it is better to buy 1420 call. Currently somewhere trading 18 to 20 kind of a levels. One can keep a stop loss of 6, and the upside target, I want to revise the target since we have seen a slight sharp up move in the particular counter. So I want to revise the particular counter to target to 35, and second target would be 40. My third and the last recommendation would be on Jubilant Food. It has provided a fresh breakout from its symmetrical triangle pattern, and good amount of long build-up is happening in this particular counter. The upside target I'm expecting is of 1470. One can keep a stop loss below 1400. So that is my buy recommendation.
Guys, so those are just some of those recommendations coming in from our experts, but there are also some stocks that we want to address today, largely on account of the kind of movements that we've seen in your change in open interest. The first one I want to address is Kaveri Seed Company. Let's pull that up. It's seeing some gains today. You know, Kaveri Seed Company, as we all know, has been extremely volatile. You know, but given the fact that the first quarter becomes extremely crucial for Kaveri Seed, at least in terms of fundamentals, because of the fact that it gets a majority of its revenues in the first quarter, is the reason why it starts looking at and seeing traction March onwards itself. Now, this is curious about, well, we're seeing a little bit of an up move today. It's up as much as 2% today, and open interest has increased by as much as 13%. Even on a technical basis, what's happened over the previous few weeks is that while it did move around the mark of 375, it has gradually moved upwards towards 470 odd levels currently. Now, whether or not this is actually moving in tandem with the broader markets, or is it moving on its own accord, well, that is something that we need to figure out. But technically, it's gained as much as 17% in the last 1 month. Kunal, can you come in on Kaveri Seed? How would you place your bets here, if at all?
See, I think looking at the overall stock structure, I think in the last 2 weeks, the stock has seen some massive declines. That is from the levels of 550 and downside 386. I think that was a very big fall that came into the stock. At the current juncture, yes, the stock is now trading at a very crucial resistance of 475. I think 475 will now act as a resistance for the stock on the upside. In the recent times, the stock has seen some kind of a pullback, but how this pullback would materialize would take much more time. So at the current juncture, I would not advise anyone to go long into the stock. The support for the stock stands at 440 at the current levels. The stock needs some more confirmation that a base formation is forming into the stock, and we might see some significant rally on the upside. So I think yes, still we get a confirmation. I think one should definitely not enter into the stock, because in the recent time the stock has seen some quick up move on the upside and has given a breakout from 440 kind of a level. So now the earlier resistance that was at 440 has now become a support for the stock. So as long as it stays above 440, definitely the stock is in a positive momentum. Any positive development towards the levels of 440, one should definitely initiate longs and can look for an upside targets of 500 to even 520 on the upside. But at the current junction, I would say avoid.
All right, at the current juncture, it's an avoid for Kaveri Seed Company. That's the view coming in from Kunal. Let's move on and talk about the other stock that you want to address. It's ICICI Prudential. Now, off late, again, to just touch up slightly on the fundamentals, we've had a lot of traction in HDFC Life, ICICI Prudential, as we have in the case of SBI Life too. But the thing about ICICI Prudential is that over the last 2 or 3 weeks, what we've seen is that there's been a stiff resistance around its 200 daily moving average, which is somewhere around 348, 349. It hasn't managed to at least close above those levels, and well, that is where there has been a little bit of a problem for ICICI Prudential. Today, again, we are seeing a lot of traction in this particular counter. It is on the losing end today. There's been a 10% increase in open interest with less than a week to go for its expiry. The question is, what do we do for ICICI Prudential, and what levels can we keep an eye on? Nilesh, this one is for you. How would you trade ICICI Prudential now?
Yes, you have rightly highlighted the point of 200-day moving average. It has shown some sort of a rally in the past couple of trading sessions, or I would say in the last 8 to 10 trading session. But if you look at the overall broader chart, if you just pull out the chart of the last 1 year, it has continuously underperformed. From the levels of 450, it has corrected towards the levels of 280. So this is merely a pullback. So that is question mark here is that whether this rally is likely to sustain or not. If this stocks moves above 390 zone, that is a 200-day moving average. So above that, there could be a buying opportunity. As of now, I don't see any trade at the current level. It is better to avoid for the time being, wait for the confirmation which will come above 390 zone. For the upside target, then one can expect is of 400 kind of a zone. I just want to revise the levels that I'm mentioning, that is 350. So 350 is a level. If it breaks above 350, then the next target that I'm expecting is of 390, whereas immediate support is placed around 320.
All right, let's move on and talk about escorts then. And this is something that we have been talking about of late. Escorts has actually been moving contrary to the rest of the automotives and farm equipment sector of late. From what we see is that it has climbed from the levels of 600 in February to as much as 820 odd levels currently. So over the previous few weeks, there has been a steady climb. It has also moved above its crucial daily moving averages. The question is there more strength in store for this particular counter? Kunal, your observations here in escorts?
See, I think overall the stock still remains definitely in a buy momentum. Even if you see on a weekly chart, the stock has given a fresh breakout from the upward trending channel. So I think yes, definitely it remains in a buy momentum. The stock is currently very positive on the chart front, but I think one should definitely wait for some kind of a correction that would be coming into the stock. I think since the stock has seen some sharp rallies in the recent time, we might see some kind of profit booking coming into the stock. So I think overall the momentum still remains on the buy side, but at the current juncture I would definitely not recommend to buy. I think wait for dips towards the levels of support zone of 780, 775 kind of a zone on the downside. I think that would be an ideal buy area when where you can look for higher targets of even 900 to 950 on the upside. So I think wait for that correction. If you get any correction towards the levels of 800, 780 kind of a zone, I think that would be an ideal point to exit, ideal point to enter into the stock with a stop loss of 750 on the downside for targets of 820 to 850 on the upside.
All right, let's also talk about the other stock that we wanted to address, and that's Zee Entertainment. Zee Entertainment is the other very interesting one. There's been a lot of change here, and overall, we're seeing unwinding. There's longer unwinding coming through, considering the stock is down as much as 2%, around 3.5% decline in OI. After the kind of climb that we saw in this particular stock, over the period of January, 500 and thereabout, and then it's come back around the levels of 430. Ever since then, there has been just a gradual slide. A lot of traders out there would be in two minds as to what to do with Zee Entertainment currently. It's down around 1.6%. Kunal, actually, let me take this query back to you. How would you address Zee Entertainment?
See, I think overall Zee, if you look at the charts, I think when on 23rd of January there was a sharp fall into the stock, and now the stock is again back to the support levels where the earlier fall had eventually started. So I think now it is trading at a very crucial zone. If today's low is not breached and the stock doesn't closes at day's low, then one can definitely look to see some positive momentum into the stock and can see again an upside rally towards the levels of 480 to 490 kind of a zone. So I think today's close would be very important for the stock. If the stock closes above the levels of 440 kind of a level, then definitely one should initiate buy and look for an upside targets of 470 to 480 kind of a zone. Let's wait for the close. If the close is positive, then definitely one should initiate long. But if the stock closes below 435 kind of a level, then definitely we can see some further pressure on the downside and even come down towards the levels of 420 to 415 kind of a zone. So I think today's close would be very important for the stock, either on a buy side or a sell side trade. So if the stock closes above 440, then it's definitely a buy.
Okay, and we actually have a query on Mindtree. This question comes from Tamil Selvam, and it's actually an options query, so I'm going to take it up. He says that he has sold the 940 put at 8.5 and he's bought the 960 put at 21.5, and he wants to know if he can actually exit the strategy. So all right, so it looks like a bear spread to me as to his this thing. So the 940 put, which he has sold at around 8.5, is currently trading at 8, and he is making a little bit of a profit, if I'm not mistaken, considering it as a. But the 960 put is around about exactly where it is. I think the question really is, can we expect a marginal down move on Mindtree over the next few days? And let's not forget, fundamentally, the company has deferred its buyback to the 26th on Tuesday. So that may just be a crucial day, and that also comes before expiry. So that just may be an important day to consider and keep in mind. But Nilesh, let me take up the technicals and the futures and options with you. If you have heard me correctly, and if you want me to repeat the options, you can tell me. But how are you placed on Mindtree, and how would you address Tamil Selvam's query? Would you ask him to exit his strategy?
Yes, I've heard the strategy. It is bear put spread. Looking at the current chart structure, it indicates it is making high and high low formations, and we have seen in the overall IT space some sort of a correction in today's trading session. But if you look at the overall broader chart of the Mindtree, it's slightly looking positive. And from the expiry point of view, I would say he should actually exit the strategy because the stock is making high and high low formation. So the chances are very high the stock may find some sort of a support near 930 zone. So that is the immediate support level for the Mindtree. Whereas the upside can restrict towards the 970 zone. Since he has initiated the bear put spread, I would say it is better to exit at a cost watch is since the spread is trading almost at his buying level, so it is better to exit the particular strategy.
All right, so that is a recommendation coming in. Exit this particular strategy, Tamil. Also a word that should we see the buyback at a higher level from current, that would, if the buyback comes at anywhere, and of course that is considering the board does consider buyback on Tuesday. If it comes anywhere around 1200 or 1300 or 1400 from current market levels, if it's a pretty aggressive price, then there is further likelihood of the stock at least going up from current levels. So that's as far as the fundamental standpoint is concerned. But you've heard as to what Nilesh has to say about your strategy going forward. Well, unfortunately, guys, we've run out of time on the show, so well, we're going to have to wrap this session. So I am going to take a moment to thank both our experts, Nilesh and Kunal, for joining us and taking us through their views on well, several of the market's aspects, as well as solving some of our viewer queries. You can check out all the website, especially the F&O pages, which will give you a lot of data for you to, well, trade that you can use. And on that note, it's a wrap on this edition of the F&O Show. But for more news and updates, stay tuned to Bloomberg.